Welcome to Stock Shots. Our guest today is trader, advisor, and author Kevin Kerr. Kevin's book, A Maniac Commodities Trader's Guide to Making a Fortune, a not-so-crazy roadmap to riches, is a must-read for the individual investor. We're so pleased to have Kevin with us today.
Kevin, thanks for being with us on Stock Shots this morning.
Well, excellent to be here. Thanks.
Kevin, we've had several investors on the show lately that contend that the U.S. economy and the dollar is really in trouble. What's your position on the dollar?
Well, we've been saying this for a long time, and the dollar has been battered and beaten here, and we seem to hit new lows, and now finally we're seeing the Fed come out and starting to talk about supporting a stronger dollar, and it really isn't the Fed's job. That's more of the Treasury's job, but it is good to see that the Fed is starting to take a stance. But the bottom line is, words are kind of empty. We really need to see action. If Bernanke had come out and actually raised rates, then I think we believe him a lot more, and I think the market, is still very hesitant to believe that the dollar is bottomed finally yet.
Well, we've heard different opinions on this show also as to where we are in the ag commodity cycle. Is the bull run for the agricultural commodities over?
This is a very, very thing that's close to my heart, these markets. I've been trading for about 20 years, and just in the last 5 or 6 years I've really gotten involved in the ag markets. And in fact, I have a fund that focuses on the ags. And I'm very happy to see a lot of the things that are happening, and I'm kind of disturbed in other areas. We've seen just a huge influx of fund money and private equity into the agriculture sector, just a huge boom. And while I don't want to call it a bubble, I am very concerned about a lot of this hot money moving into real assets, grain elevators, infrastructure, farmland, and the costs have just been exponential. I mean, I talk with farmers all over the Midwest and elsewhere. And, sure, they're making a lot of money, but their costs for production are just so much higher. Everything that they use to put these crops in the ground, fertilizer, seed, diesel fuel, and the costs are just exponential. So while, profits for them have increased, or should say incomes have increased, the outflows of money are even higher. And a lot of them are also concerned about some of the deals that are taking place with a lot of these grain elevators, very uncertain about what the future holds. So while I think that this is far from over, I see it moving so quickly that there's a lot of things that concern me.
Well, and you mentioned the higher cost of diesel, and obviously that is on everybody's mind lately. Well, we saw oil go to 100, and the market absorbed it, got on up to 115. It seems like the market kept absorbing it better than I thought they would. But now we're kind of in a range at 130 that you think that two things. It's moved up 30% in rapid fashion. And it's been over 100 for a sustained period of time. Do you think there's a point where the market is really going to have to start looking at this and it's going to have a tremendous impact on the market?
I think we're already starting to see some signs of it. Demand destruction is something a lot of people talked about. Well, when we get to $100, we'll see huge demand destruction. And we really, we didn't see it. We heard people grumble a little bit. But we didn't see a big change in behavior. And now, though, with the spike up to 130, we're seeing significant changes. Airlines, I think, are the most obvious, cutting flights, cutting staff, shelving airplanes. And this is a very good example of an industry that is forced to take action because they simply can't turn a profit with jet fuel costs this high. Also, we're seeing people drive less. We've already seen a little bit of a reduction in driving, and people are seriously considering hybrid cars or other alternatives, mass transit. None of this was happening at about $100, but at $130, we're starting to see some activity in that area and some actual demand destruction, as they call it. I don't think it's enough to really make a dent because, we are seeing increased usage globally on an exponential level. So even if we offset a lot of that usage here, it would have to be a lot more than what we're doing because of this growth in the rest of the world.
When you mentioned the global demand, and that's the story that I focused on when looking at oil, but a lot of politicians now are trying to blame the speculators. And while I agree that there's an element of speculation in any market, are the speculators really to blame for 30% increase in the price of oil?
No, it's short-sighted, and I'm not saying that because I am a speculator. I make money on either side of this market. The point is, the demand is the story, okay? If demand is the cake, then speculators are the icing, okay? So, take away the icing, which is a little bit, and you're going to have this whole big cake of demand that is continuing to get bigger and bigger. And so to blame it, that this move, this exponential move in crude, in agriculture, in the metals, is just based on speculation is very short-sighted and really a waste of time, where that money and time and effort could be put towards finding alternatives to new innovation, to legislation, to whatever might help to solve this problem longer term. It's certainly a factor. I'm not going to say that it isn't. It's a part of this whole equation, but to say it isn't demand is very short-sighted.
Well, I agree, and I found it pretty disconcerting that some of the individuals who were most critical were the ones that were wasting our money with the steroid hearings over Major League Baseball.
Exactly, and I remember watching the congressional hearings and where they were grilling the energy companies, and the congressional committee should turn the viewer on themselves and say, how much are you charging in taxes at the pump? How much of that gas price is taxes, and where does that money go? Everybody's a little bit culpable in this whole equation. It's us for using too much. It's Congress for not having a solid energy policy. It's the oil companies for not building enough refineries and infrastructure. Everybody's a little bit to blame here.
For the rest of this great interview, visit our website, www.stockshotz.tv. That's www.stockshotz.tv. Thank you for listening.